Good morning and happy Monday, and welcome back to another edition of Accessible Alpha's market update for the week starting September 16th. Hope you had a great weekend. A lot to cover this week. Let's get into it. First things first, as always, please keep in mind that anything that is discussed in this podcast, the YouTube video, is for informational and educational purposes only. So please take this information as is and certainly not as investment advice in any way. So, first things first, now that I've made a few of these videos, I wanted to share what I'm working on to make them better for all of you. So first things first, I'm going to shorten them a little bit. Initially, the plan was to do 5-10-minute episodes. They turned into, last week was 30 minutes, and that's even with editing and all sorts of things like that. So first things first is I want to shorten the episode lengths. I want to get them to about 15 minutes. I think that's enough time to cover what we have to cover, but not too much, where maybe gets a little redundant, a little too much information. The second is I want to improve the audio quality, so I've invested in some better microphones, some better technology on the back end so that the audio quality is a little bit more consistent, a little bit better. I'm going to work on using less filler words. As I've written these episodes, or at least the topics in them, then I go to speak to them. There's a lot of ums, there's a lot of you knows. I want to try to get rid of that. So I'll do my best, but I think that'll make the podcast and the videos a little bit more easy to follow along. And I'm going to try to speak a little bit slower. I am from the Northeast, I'm from Boston. We tend to speak very quickly. I'm going to work to speak a little bit more slowly, use less filler words, be more intentional with the points I'm working to make in these videos, and hopefully that'll make for better videos. But leave me comments. What do you like about these videos? What do you not like about them? What can I improve? I'd like to hear from you, so if you wouldn't mind doing that, that'd be really helpful. So with that said, let's dive in. So we're going to talk about the rally in the index portion of the episode, but let's cover a few news stories that came out of the companies this week. The first is Apple had its large announcement announcing the iPhone 16, Apple Watch 10, AirPods, things like that. I used to work for Apple, back in college and a few years after college. I kind of put this bullet here that says, yay, another nice pocket camera. It just seems like Apple certainly is this cash cow, doing very, very well from a company perspective. I'm one of the folks that would like to see a little bit more innovation. They are putting these larger chips. The A18 is the chip they're putting in the iPhone now. Apple seems to be leaning towards AI and maybe using this chip to get there. I'm bullish on that. We'll see, but I thought maybe the stock price would move a little bit after Apple announced these new products, and not so much. The price didn't really move. A piece of exciting news that came out of the market this week is Oracle. So Oracle had earnings last week. They beat on earnings and actually gapped up. If you recall from the past few weeks, we've had some big players like NVIDIA announce earnings, beat on earnings, both on revenue and DPS, but gap down, which indicates that investors are rotating out of technology. Oracle beat on earnings and revenue and actually gapped up. This is a little bit ironic because the reason why there was such a gap up is that they've announced their new Zeta Compute supercomputer, which is specific for AI. And the reason why I think that is really ironic is that this new supercomputer is actually run with NVIDIA Blackwell chips. So you would have thought that when NVIDIA announced maybe they would gap up or the bull run would continue. That clearly didn't happen, and that's probably because investors are taking profits and we think NVIDIA might be at this frothy high. But lucky for us, investors who are looking for tech to take off through the remainder of 2024, Oracle announced and gapped up, which was really great. Adobe was the opposite story. They also beat on their earnings last week, but they actually gapped down. The reason for the gap down was there's a lower outlook for the remainder of the year, in Q4. And on their call, they basically said that, we did real well in Q3 because some deals that we thought were going to close in Q4 actually closed in Q3. That means the Q4 earnings come down, or the outlook or the guidance comes down. That's what caused the gap down. This is actually a bit interesting because now, even with this bull run we've seen in 24 in the general market, Adobe is in negative territory year to date. and they're in negative territory for a full year as well. So from the economic side of things, last week the CPI numbers came out for August, a little up. So core CPI was at 0.3%. Remember, core CPI is spending in urban areas, but excluding food and energy. Total CPI obviously includes food and energy. That was up 0.2%. So yep, it was up a little bit in August, but these two plots come from Edward Jones's weekly market wrap. As we can see, inflation's clearly coming down. At around this high in August of 2022 at 6.3%, we're now at about 3.2%. And the plot on the right is basically showing, how high inflation has been since 1958 and where that 2% target that the Fed always likes to see, kind of how often we've been in that range. So we can see we're certainly trending in that direction. Things are moving the way that they're supposed to. But as we've spoken about in the past couple weeks, we always think about, well, what happens next? On Wednesday, we think the Fed will reduce the rate by 25 bips or 0.25%. As we've spoken about the past couple weeks, what does that mean? Again, we don't know, but if we look back at history, and I've covered a few of these periods in previous weeks, when we're not in a recession, which is clearly important, we've had positive GDP growth. When we're not in a recession, so looking at November 1966, August 84, July 95, and September 98, when the first rate in a series of rate cuts has come out, 1 year later, in November of 1966, 1 year later, the market was up 19%. In 84, it was up 9%. In 95, it was up 19% 1 year later. And at September of 1998, after that first in a series of rate cuts, the market was up 23%. 2 years later, in 1966, market's up 34%. In 88, 2 years later, it's up 39%. In 95, 2 years later, it's up 73%. Again, in the 90s, we got to keep in mind the technology was coming to the fore in the economy, but 73% after a rate cut, not bad at all. And in 1998, after the first of a series of rate cuts, the market was up 40%. So again, we don't know what's going to happen. Last week, I covered what the time series of the market return actually was after the first rate cut in a series of rate cuts, and we did see it was a little all over the place. It's not 100% of the time when they cut rates, equities are going to go through the roof, but all signs seem to indicate that with the positive economic data that we're seeing, the cooling job market, the inflation rates coming down, it seems like we could be poised for a good bull run towards the end of the year. We'll have to wait and see, but I'm excited for this week, and I'm excited to see how the market reacts to it. So let's take a look at the indexes now. Last week was a good week. And I don't just say that because there was the largest increase in the S&P that we saw this year, but 2 weeks ago we saw the largest decrease that we've seen in the S&P this year. So it was nice to see such a quick rally back. But what is very exciting for me in this is that we not only had 5 days of straight gains, but we had 5 days of straight gains in the S&P with some pretty good volume. It wasn't like volume is really weak. This is great because the S&P is now back at its top or right around its top. And that's always interesting because it seems like we're kind of hitting the ceiling here. And if the S&P can break through that ceiling, and yes, tech is still lagging down here, but with the other holdings, if the S&P can break through and we have some positive economic data coming out, like the Fed rate cut potentially, can't promise it, but Fed rate cut on Wednesday, that could push the S&P to new highs throughout the remainder of the year. Again, I'm not working to predict the market. I am working to understand it. But seeing that the market is almost refusing to sell off past a certain point is a great thing. We had this double top here. It's almost been violated in a sense because that rally last week to bring it back. Could we have a triple top? I don't know. Time will have to wait and see. Will this come down to the 54? Where is that support level down here? This kind of 54.50 support level that we saw in mid-June, and then again we saw in mid-July, and then in mid-September we're now seeing it again. Could it pull back to there? It's very possible. Time will tell. But with the Fed rate cut coming, or proposed Fed rate cut coming out on Wednesday, that could blow the market wide open. This will be the first rate cut since March of 2020, after the COVID pandemic, clearly. So we'll have to see what's happening here. But last week, I just wanted to break down what really drove this S&P rally. And a lot of them were tech names. So I have the top 10 here. Broadcom was at 22% last week, increase in price. Supermicro was at 18%. Then we have Warner Brothers with a new deal with Charter that came out last week. They're up over 17%. We have Vistra as an energy company, but then we saw Nvidia. We haven't seen Nvidia in the past bunch of weeks. Now we're seeing it back again, which is great. AES, which is an energy company, Arista Networks, Oracle, Norwegian Cruise Lines. This one's actually really interesting because a note from Bazinga here, quote, consumers are apparently itching to go on a cruise as online interest in cruise lines has shown consistent growth over the past several months, according to website analytics company SimilarWeb, end quote. Very interesting there why, folks may be interested in Norwegian, but again, they were number 9 at a 14% increase last week. And then GE Vernova, which is a renewable energy company out of GE. You'll see there's a lot of tech names here. And if tech names are driving the market to new highs, that's great for investors. So time will tell. It's a little too early. I'm personally someone that requires confirmation of market movements before I get into positions. But it's nice to see that we did have a pullback 2 weeks ago. We had a very strong rally this week. Now we're back at highs on the S&P 500. Again, NASDAQ's lagging a little bit, which makes sense because we've sold off on some of these larger tech names, but we saw a pretty good rally last week. And the Dow Jones, similar to the S&P because it's more broad in a sense than the tech-heavy NASDAQ, but the Dow Jones is also at its highs. So I think this week, especially with this FOMC potential rate cut that could come out on the 18th, on Wednesday, I think we could be in an interesting territory to potentially have some momentum for a bull run in the end of the year. With that, let's get into winners and losers for last week. So for winners, I have, the 600 names that I have on my list that I track for winners and losers of the past week. The filter that I have on that is I look for companies that have had positive relative volume, which basically means the volume in that day is more than the 10-day simple moving average of volume, has to be more than $20 in price, 300 million in market cap. Out of 600 names that I screened for, only 90 were negative last week, which is pretty good. 510 were positive, and the 510 are clearly not just tech companies. There's a lot of companies out there that saw a lot of great gains last week. And it also means that the buy volume was extremely heavy at the name level and not just the overall market level. Keep in mind the S&P 500, for example, is value weighted. So the very large names like the Nvidias and Apples and Microsofts and Googles and Eli Lilly and Berkshire, things like that, when they have really great moves, they can move the market just given their weight. But when we have 510 out of 600 names in the universe that I'm looking for that were positive last week, that's a pretty good representation that says folks may be getting back into equities, maybe a bit early, you could argue, in advance of the potential rate cut on Wednesday. But this is a really great sign. Let's look at a few in particular, though. The first two are Instill Bio and Summit Therapeutics. This is Instill Bio, and you can see by this chart, they were, at the beginning of the week trading around, we'll call it $15. At the end of the week, they're closing at 84. And you can look at this and say, holy moly, what a great investment. This is clearly an anomalous chart, but Summit had a very similar kind of price action. And I wanted to point it out because it actually is really positive news for both of these companies. So these two companies create cancer therapy treatments, and the cancer therapy treatments, while they're still in a phase 1 trial, they actually outperformed the incumbent in their market, Keytruda, and Keytruda has about $25 billion in annual revenue. So while these are clearly much smaller companies, I think that's really interesting price action if you're an investor maybe looking for something a bit more risk on, and especially in this environment as well. But these are great charts. Clearly they're winners last week because they spiked so high. But while I'm not going to say I'm buying them or not, these are things to pay attention to because these seem like strong companies with strong products in strong markets as well. Netgear was the other company that I picked out as a winner last week, up 39% on the week. And basically there's two reasons for this. The first is they had some ongoing litigation with a competitor of theirs. They were able to win that litigation. It was over a patent infringement, basically. They were able to win that litigation at the tune of $135 million. The other is they have a 5G hotspot that they've been working to come out with. That's going to release a little bit early in Q3 instead of Q4 that they initially planned for. So this is good news for Netgear. And again, I like to see things like this coming from a technology company and having the market react accordingly where it has nothing to do with earnings. Again, we'll see earnings pops. But this has nothing to do with earnings. This just has to do with good news. The market's biting in on it. There's a huge gap up with great volume. This is good news if we're thinking about a bull run towards the end of the year. Again, we need much more confirmation, and I think next week will provide that. But it's good to see some of these single names, doing well. For losers, there certainly were a few. I wanted to highlight a couple that I thought were interesting as a way to diagnose maybe larger problems. The first is Ally Financial. And this stock is down over 17% last year. And the reason why is the CFO noted intensifying credit challenges. We spoke about this last week, but I actually look at credit reports, specifically consumer credit reports, because if we think about inflation and prices are high, yet company earnings are also really high, that leads me to believe that, well, folks aren't getting paid more and more and more, yet they're buying more and more and more, and things are more expensive. They may be putting these on their credit cards. And I think consumer credit or just credit in general is a really good thing to check. We saw with 2008 what happened when we didn't pay attention to credit. And Ally is basically saying, hey, our stock is down over 17% last week because we have these intensifying credit challenges. I just think that's interesting and something to note. Moderna is down quite a bit last week, and this is because they've reduced their R&D expense by over $1 billion. Humana is also down almost 10% last week. This one's interesting because this really went down after the debate. And the reason why is that investors are feeling that if we enter a Kamala Harris economy, Kamala Harris administration, that the payouts to these Medicare, Medicaid backing companies like Humana would be less. If the Republicans come in, if Trump wins, we could see an increase in those billable payments to companies like Humana. But because of at least the market's interpretation of how well Kamala Harris did in the debate last week, they've priced in that companies like Humana may not fare very well. United Health is also another large company that backs Medicare and Medicaid. Their price was also down last week. And as we mentioned at the top of the show, Adobe was also down, gapping down after earnings because they have cut their guidance for the remainder of the year, citing that some of the deals that they thought were going to close in Q4 closed in Q3, which is great for Q3 earnings, but unfortunately means they have to cut the guidance on Q4. They are now in negative territory for the year. All right, so let's get into the industry rotations. Again, it's extremely important to know when you're investing your capital, what is in vogue in the market? What are investors interested in? What are they not interested in? What are they buying more of? What are they selling more of? I'm a proponent of investing in securities, investing in names that are seeing positive momentum in the markets. And industry rotations are a great way to ensure that something you're interested in, a stock that you're interested in, the market is also interested in. We've spoken about this for a few weeks now, but if non-defensive sectors are doing well, sectors like technology, sectors like consumer discretionary, that's a good thing for the economy. It's a good thing for equity markets. The only two sectors that were down were financials and energy, and they weren't down by a boatload. Clearly, we saw this large rally, so I wouldn't expect a whole sector really to be negative, but it seems like financials and energy did not get the volume, the buy volume that we certainly saw with technology. So for industry groups that are moving in and out of favor, for those on the podcast, I will read the slide, but groups that continue to move up, continue to become more in vogue, continue to become more interesting to investors are medical equipment and service, oil and gas, packaging, REITs, local banks are doing really, really well. Real estate development and operations company, mining, and tobacco and food. The one I added this week was power utilities. Power utilities doing really well. Again, seems pretty defensive, but there's a bit of a lag on this because I look back about 6 months to see which industry groups outperformed which groups. So just 1 week of positive technology advances really won't change this too much. But industries that were moving down or are moving down, again, for those on the podcast, I'll read the slide. Those industry groups would include computer hardware, transportation and hotels, apparel manufacturing, semiconductors, software, restaurants, electrical power equipment, and machinery. Those are our industry groups that we've seen. And 2 that I've added for this week that just jumped off the page were consumer electronics and specialty retail. Again, even with this rally, really led by tech last week, this will take some time for maybe big technology-based industry groups to rotate back into favor, but it's always important to pay attention to these things and make sure we're on top of it. All right, so for next week, not a whole lot happening. I mean, the Fed rate announcement on Wednesday is by far the highlight of the week, so we're all really looking forward to that. But there are a few other reports, a few other earnings to note. So Ferguson Enterprises, which is a kind of an HVAC manufacturing firm, they'll be releasing earnings. Don't really love the chart, don't really love the company, but they'll be releasing. Retail sales will come out on Tuesday. I do think that is interesting. When I think about the defensive versus, non-defensive kind of holdings, I think retail sales is interesting to see how folks are spending their money. For Wednesday, again, we have the Federal Open Market Committee rate cut decision, which comes out, I think, at 2 p.m. Eastern time. We're also going to have General Mills and Steelcase release earnings and housing starts. So again, I'm always interested in what housing means, especially as rates come down. So that'll be good to get that report. On Thursday, we have FedEx, Lennar, Darted, and FactSet that are going to announce. I really like Lennar. I'm not long in Lennar now. I may buy it this week. Again, educational, informational purposes only, but they have a great chart. They are performing really well in their industry group. Lennar, if you're not familiar, is the second largest home manufacturing firm in the United States. And again, with rates coming down, with housing starts up, that could be a good position. So we'll see what happens during the week. We'll see what happens with their earnings, but it has a great chart and great fundamentals so far. And on Thursday, the U.S. leading economic indicators come out. And as we discussed a bunch of weeks ago, the US LEI, it's a composite index of a bunch of different components of the economy. And it basically just makes us aware of how healthy the economy is in aggregate without solely having to look at things like inflation or GDP or something like that. So a little bit interesting there, and typically the market reacts to it, so we'll have to wait and see what happens there. All right, quote of this week comes from Carlos Slim, he was the richest man in the world for a while there, a bunch of years ago. But I think that when we head back to these market tops like we saw last week in the S&P and on the Dow, it really is about being prepared. Quote, with a good perspective on history, we can have a better understanding of the past and present, and thus a clear vision for the future. I just interpret that as, yep, we're back at tops. We saw some great activity with some technology holdings like Oracle, but let's continue to be prepared. Let's continue to do our analyses. We don't have to, put our foot on the gas right now. We can still wait for confirmation and hopefully see a good breakout of the tops after we see the FOMC rate cut announcement on Wednesday. But we can continue to be prepared, and I think now more than ever, and if it is going to be a bull run in the last 3 months of the year, a little homework can go a long way when it comes to investing. As always, please remember to comment on the video. If you're watching on YouTube, please comment. What do you like? What do you maybe not like? What can I do better? What would make the information more valuable? The audience for Accessible Alpha is anybody in the markets, novice traders, experienced traders. I just want to share what my process is, how I think about my investing and trading, and hopefully that helps other folks as well. If there's something you want to see or there's information that I can present a little bit better, throw it in the comments. I'd love to hear it. Join our Discord. So the link is going to be in the video description. Discord is a place where we can just chat about markets or stocks or economic news, anything you like. It's great to get everybody together and just have ongoing conversations as the week progresses. Please like the video on YouTube and subscribe to our Accessible Alpha channel. I release these every Monday at 8 a.m. Eastern Time. Subscribing is just the best way to get them automatically, or at least be notified of them. And if you're on the podcast, please rate the podcast. That's always extremely helpful. And if you're watching the YouTube video, but you want to have a video-free version, the podcast also comes out on Monday mornings at 8 a.m., just an audio version of the video, and that's available on Apple and Spotify. So thank you so much. Good luck this week. Really excited this week to see what's going to happen. And I'm looking forward to recapping it in about a week's time. Have a great week.